Yeah, hello friends, welcome back to our channel once again. Okay, so it's been a while that I am not able to make any videos, so I thought of making a new videos and means like yeah, I mean even I'm filled up with some personal steps, all those things. Okay, so I'm not able to spend much time on this YouTube channel, my blogs, postings, all those things. Okay, so now I've been settled up. Okay, so now onwards we can expect consistent videos for the learning purpose and whatever the trades I'm taking in the blog post as well. Okay, so if you're watching our video for the very first time, then I would request you guys to just subscribe to our channel. And we have posted lot many options related, intraday related, and all those stuffs in our YouTube channels already, so you guys can go through all those videos. Okay, so what we are going to have a look into is today we are going to have a look at an iron counter option strategy. Okay, so lot many people are worried that saying if you are going for an option selling for like short straddle or strangle, so it comes with an unlimited losses on both the sides, right? So people want a limited loss and limited profit strategy. So iron counter is one of the best option strategy for that purposes. Okay, so it will comes with an limited losses on both the sides, so wherever the market goes we are not going to lose anything other than our maximum loss, whatever we are um, going to get capped while entering the strategy itself. Okay, so what we have to do is, so this is an extra web application where we can just go for an payoff graph option strategies and all. Okay, so always go for a monthly contracts, so it's better to do in a monthly contract so that we can get a good amount of a premium, and also if something goes wrong we can do some adjustments in a monthly contract, so that we'll be having a good amount of a time for our adjustments, and also we'll be getting in good premiums as well. Okay, so now we are on 13th of February, so we just have only 2 more weeks left for the current expiry. Okay, so I'm going to show you guys an example in a next month contract. Okay, so what we have to do is just look at the Nifty's price. Current price is at 163. Okay, so just sell and call option and the put options, which is like around 400 points away from the current level. Okay, so 400 points, so I just to make it as a round number, I'll be selling an 15500 call option on the upside. Okay, and after this what we have to do is to hedge this position, sell at 200 points away, sorry, buy a 200 points away call option on the upside. Okay, so we have sold a call option 15500, and we'll be buying in 15700 call options on the higher side to hedge our 15500 call options. Okay, suppose that we have to sell a put option as well. Okay, so on the downside we can go for 14700, which is like almost 400 points on the downside. Okay, okay, so 14700 put option sell and buy 14500 put option one lot. Okay, so if you look at, so this is our option payoff graph it looks like. Okay, so if you see what we have done is we have sold uh, 400 points away put option and the call option from the current level, and to hedge that position from that sold strike prices we'll be selling, sorry, we'll be buying and 200 away points, 200 away OTM options to hedge that position. Okay, so we have sold 15500 call option and 14700 put option. To hedge those we have bought 15700 call option on the upside and 14500 put option on the downside. Okay, so now if you look at, our maximum profit will be 9000. Okay, and the maximum loss will be 6000, and the max risk reward ratio is like 1 is to 1.5. Okay, so we are taking a risk of 6000 and we'll be getting the profit of 9000. Okay, and if you look at the break evens, we are safe till 14580 on the downside and 15620 on the upside. Okay, so the margin required for this is like hardly 60,000, so it might be like somewhere around 60 to 65,000 only. Okay, so this is an payoff graph. So here you can see that the payoff graph looks like. So if the Nifty is expiring between these sold two sold options strike price levels, then we'll be getting the max profit of 9000 rupees. And if the Nifty is breaking down its break even, we'll be going to get only the maximum loss of 6000 rupees per lot. Okay, so this is in delta neutral strategy, so delta will be near to and zero. Okay, so post this, If Nifty expires between these two levels, we'll be going to enjoy the profit, right? If at worst case something bad happens, and if the Nifty started moving upside or a downside, right? So what we have to do is, for every 200 points upside movement, just roll up your put credit spread. Okay, so just, if let's say for example market is at 15163, so tomorrow if market goes to 200 points upside, let's say for example 15 363 or 350 15 350, okay, what you have to do is just this 14700 put option and 14500 put options will be in a profit. So just book a profit in this and roll up this position 200 points away. Okay, so which means that sell 14900 put and buy 14700 put option on the downside. Okay, so by doing this you'll be collecting some extra profits, and you'll be shifting your upside break even on the further side, and you just have to roll up your credit spreads keep on for each and every 200 points on the upside. Okay, so let's say for example if the market is moving downside, so for every 200 points downfall, what you have to do is you have to roll down your call spreads. Okay, so you have to book a profit in 15500 call option and the 15700 call options, and you have to roll down 200 points on the downsides. Okay, so this is what you have to do it. Okay, so hope you guys will like this one, and just click on the subscribe button and like the bell icon. Okay, and like and share these videos with your friends as well. Okay, so that your friends as well get some knowledge. Okay, so other than this we'll be providing some tips on the options. Whatever the positions we take, we'll be sharing that with the persons. Okay, other than that we'll be having an paid webinar which is at a very cheaper affordable price, and we'll be having this webinar on the every weekends on either by Saturday or Sunday, based on the availability of the participants. Okay, so if you guys want to enroll, you can just WhatsApp me at 73052262224. Okay, and also just do comment, like this video, so that will encourage me to do further more videos as well. Okay, so thanks for watching friends. Have a happy trading.